Thank you so much for coming. It's a real pleasure to have you here in this penthouse in Davos in the beautiful day. And we have a phenomenal topic that everybody else is doing too, but we try to twist it in a different way. And we try to different way, and you see this really cheesy slide color, and this is on the purpose. So everybody talks about green, but when you put this in the laundry machine, it usually washes out. And what remains here sometimes is gold. And gold is also the color of our main sponsor today, which is Agnico Eagle, thanks to Sean Boyd, who I will introduce you after. So this is the purpose. The second purpose is also me wearing these really funky shoes for the same purpose. ESG is everything and nothing. So you have all the colors that you like, and you can pick and choose what you do. So we try to elaborate what is really the whole thing about this ESG. So now I go down. I start with a little analogy or a parable. In the little isle of Royal National Park, which is right at the border between Canada, and as today Canada is very present, and United States. And then this little island is a beautiful national park. There has been a problem for hundreds of years for one particular company. And the company is the Hudson Bay Company, which is more than 300 years old, talking about sustainability. That were hunting for the pelts and the furs, which were sold to Asia at the time, Europe and the United States. There was not enough heating coal around at the time. And it stems, it's here in the Lake Superior, this little thing. And so these are today our protagonists. It's the Lepus Americanus, the snow bunny, the snow hare. And he lives on this island, he's very happy on that island. And he's white and clean, you know, so much. He's the epitome of the E from the ESG. But at the same time, there is another one living on this island, and this is the Lynx canadiensis, the Canada ones. Now you can say the American and the Canadians live on this little island which is protected. Now this Canadian lynx can live only with the snow bunny. That's all he eats. Now if he eats too much, he will die. If he doesn't have the bunny, he will die too. And that has been a problem which has been going for a long time. So here, you know, the Canadians eat the Americans. And that has gone for hundreds of years. And then, so that led to a formula. How can we find a balance between the two, the bunny and the lynx? And it came from the Lotka-Volterra, the predator-prey equation. By the way, it's not that I'm so smart, it's a professor from the ETH and know much more, who was the CTO of UBS and of Google and so on. He indicated me that formula that could be a nice bridge to what we are talking about. And the outcome is really two. There are two solutions that bring the equilibrium. Either extinction of both, okay? Or both sustain indefinitely. Now you can choose. Now let's take these two, this formula, and here it is, by the way. That is going 1845, where we're chasing the Hudson Bay Company, 349 years old, and what do they own today? Saks Fifth Avenue. So they're also on the borderline of extinction now, so they have to see how to continue. So now we can apply the bunny and the lynx, who is who, the shareholder versus stakeholder. And I leave it up to you, you can choose whether the Canadians are the shareholder or the good stakeholders or vice versa. How to simplify this extremely complex stuff of ESG, shareholder, stakeholder, and so on, because that's the underlying thing what we are talking about. I created a formula called the FLU formula. We have 3 sectors, 3 cycles, and 3 sustainability aspects. One is for industry, markets, and policy. The cycles is the same ones, and the sustainability is ESG. And then you have this Lotka, the predator-prey formula, and below. Now don't forget the FLU formula. Always keep it in mind when you manage money on cash flows. The FLU means the formula of little utility, because it doesn't say so much unless we take the things apart. 3 times 3 times 3. So today we talk about law, policy, industry, finance and markets. When we blow it up, we talk about these 3 cycles. And with this, with stakeholders, shareholders, you know, blending into each other, it's a collaboration effort. So I would like to welcome the panel now to stage. Maybe starting with Sean Boyd, who is also is the CEO of Agnico Eagle, the 5th largest gold mining company in the world, perceived today as the bad guys. It's dirty, it's big, it's digging out earth, and it's throwing it back, and you know, these are the bad guys. He represents the perceived bad guys. I talk about bad bad guys. Harvard Business School, they make an index. Please sit down unless you want to stand. It's also fine for me. Harvard does it's 200 companies.
1,200.
For 1,200 they select.
Pick 100 out of 1,200.
Exactly. From 1,200, which represents 70% of the world's market cap, they select the top 100 in terms of sustainability. And guess what? Agnico Eagle ends up in this top 100 year after year. Mining dirty the bad guys. So it cannot be so bad. And at the end, you represent the golden nugget, and this is very important. Now, the second thing, who invests in your company? Please welcome Fredrik Hensler from Partners Group. They manage the money, 92 billion to be exact, in companies, not just buying and selling, and buying and managing it. Please welcome Fredrik. These guys, the money and the industry to function well together, we have to have some sort of regulation, and this need to be based on facts, not emotions and not so on. And it starts with research. Okay. And one of the best research institutes for this one is called the ETH in Zurich, particularly what we are talking about. And we are very pleased to have Reza Pari, Director of the Energy Department, who is also on the advisory board, ABP, Swiss Life Investment, so he bridges all the complex ESG to provide the facts in order to create good policies. Please, Reza. And then we are very pleased, where is the last one? Roger. So somebody needs to control. Roger is the sandwich. He stands between the states and the regulatory body and between the industry and the money. Roger is heading anything sustainable from the Ernst & Young. Please welcome Roger to the panel. Now for the individual CVs, I'm not going to dig too much into it. It's all in your documents. You can look when you have time.
Just a point of clarification.
Yes.
Are you wearing white and red because you're a Canadian?
Yeah, I'm also Swiss, by the way, the same colors. They have all the colors too. United Nations speaks with me. Blue is small. It's a good. Okay, so let me start directly. We dive right into it. We make the 3 blocks to this event. First, we make the panel. We go through all these aspects of the cyclicalities. Then we have a small debate. Who will be leading the future, stakeholder or shareholders? We have a Q&A session and then food and drinks until 1 more. The whole thing will last about 1.5 hours. Q&A at the end. So hold back, write down that we have some interesting questions. We do not have, this is not the political sessions, it's not SEC relevant, it does not Chatham House rules. So you're open to ask anything, they are not required to answer anything. So let me start with the first cycle. We go directly into the title called ESG and Greenwashing. I would like to start with Sean and a little video. Do we have this video that you will explain? ESG, you know, environment, social governance. I don't go into the details. Sean has brought along something which addresses the S, correct? The social aspect, coming from a mining company. The environment is obvious, social not so much. Would you like to introduce maybe quickly the video, or just watch it off?
This is, as Kaspar said, the S is probably the most important part of ESG, because mining, in our view, gets a bad rap. We've been doing this for 6 decades. Some of the most important things we do when we approve a project is we're making a significant difference in people's lives. These mines tend to be in parts of the world where there is nothing. And we're basically creating opportunity. And we've had tremendous impact over the last 10 years in Nunavut, Canada's Arctic. And this video highlights some of the small things that we've been able to do there.
Maybe Nunavut is where and what it is?
Nunavut is a piece of Canada's Arctic. It's the size, 3.5 times the size of France. It's got a population of 40,000 people, predominantly Inuit, which is the traditional Eskimo. These people are beautiful people. When we first went up there in 2007, they didn't judge us because we were miners, or they didn't judge us because we were from the south. They said, okay, who are you? What is your plan? What are your ideas? How can we get engaged? And we've created some real meaningful businesses and opportunity up there for the people of Nunavut. But we're not there telling them that resource development should be an important part of their future. They made that choice. They decided that. When they formed Nunavut in 1999 in an agreement with our federal government, they got in return $1 billion in cash, and they got to pick 18% of that landmass, which is 3.5 times the size of France. They hired geological consultants to tell them where the best rocks were, and they own the best rocks. So essentially, they made a decision that they're in the resource development business, and they need partners like Agnico Eagle to make that happen. So there's a perfect example that we can demonstrate to the world how you can work with Indigenous people that have lived off that land for thousands of years in an extremely harsh environment and create opportunity for themselves. And we're just happy to be able to do that with them. So that's what you'll see a little bit here.
It wasn't that long ago that people were nomadic still. My dad was born in an igloo. Like, for most people, that's like, they can't even think of it, you know? You would be raised to respect the land.
This is an old lookout point. Hunters usually wait here for the herd to come by. As a person and a hunter, you have responsibilities to bring back food. Since everything is so expensive up here, we can go out harvesting caribou or fish and have food on the table.
Prior to the mine opening up and becoming fully operational, there were community consultation meetings and meetings with the community people.
So this is part of our job to make sure that we comply to what we said we would do. So when we meet a license, when we have an operating license, so whatever our work is, we have to make sure we comply to what we said we would do at the beginning of the mine.
What they did is amazing. Like, as an open pit mine, they worked and studied to minimize the impact on the environment. That's the thing that I'm really proud of.
So we do studies before, during, and after. So then we know what the state of the environment was before, and then we can measure it within the mine lifeline. So we can measure our impacts in the surrounding environment.
All the planning that goes into seeing what kinds of mitigation is being done, I really believe that the work that is being done by Agnico to be able to mine to leave a very little footprint has been great. The closure plans, making sure that the community is involved, our Inuit organizations are involved.
There's caribou all around. I mean, this is straight in the caribou migration routes. You'll have muskox, wolf packs, wolverines, Arctic hare, ptarmigans, lots of birds, geese, Canada geese, and so forth. I mean, and then there's the water everywhere in Nunavut. So there's marine wildlife, lake trout, char, you name it, we have it.
Ever since the mine's been in operation, is when there's a caribou migration and when the caribou herd is crossing the road, Agnico Eagle will actually shut down their traffic on that all-weather road and let the caribou migrate.
Our job is to make sure that the road does not impact migration. So we'll monitor, we're on the road weekly, twice weekly, and then every day during migration, just to make sure that, okay, any traffic does not impact that migration. And Agnico is also part of a collaring program. So we have collars on caribou and we can track them. So we'll know ahead of time where they'll be passing through our mine site, and then we can act upon that also. Wildlife has always been a priority. I mean, on the road, the rules on the road, wildlife first.
They are respecting what the community members have said about the caribou and the fish. It's really been working hand in hand and very positively.
So we want to make sure that the mine has limited impacts on the environment. And for that to happen, we have to make sure that the community agrees with all that. It's their land. So we want to make sure that when we're done with mining, it's in the same state and that they can use the land at the end of the mining also.
So much. That is you saw the size of the mining operation. It's not a chocolate plant in somewhere around Zurich, and this is huge. I mean, this is huge. And I think Napoleon would be jealous of you. You know, they have 3 times France without fighting. It's a big area. So let's go to the E. The Reza. The companies claim that they do what they do, and the policymakers and the politicians want to do good too, and so on. But everything at the end is based. We need to take facts. Emotions, everybody has opinion. Everybody knows something better. But at the end, we have to structure policies, corporate activities, investment strategies based on facts. And you are right in the middle of both. As an academic, you produce facts, you sort facts, you collect data, you interpret it, and you present it to the companies what is the best way to do. Talking about the environment, this is something that is a big concern to you, and you work also with governments together, Swiss government, European Union, even Americans, how to find solution to deal better with the environmental risk.
I think you have to be quite clear about what kind of risk we're talking about and what is observable. In mining, where you have runoff, you have other chemical processes and traffic and how you impact the ground, it's something that's been going on for a long time. It's very much local. So you can come up with solutions that are observable and predictable. The problem occurs in cases where you have a kind of a diversified impact that is spread throughout a region, continent, or even around the globe. How to gather up the information and aggregate it. And the data that you see is often just an aspect of it. I mean, a good example is, for example, if you think of impact of electric cars. Now, everybody would say electric cars will lower pollution. In reality today, they will increase pollution. Why? Because the entire chain is not there, it's not been set up. Now, eventually they will lower pollution, but not today. Why? Because we only look at the car, we don't look at how the charging takes place, where the electricity comes, and how do you generate that electricity, which is coal, and so if you actually go entire value chain, from cradle to grave, that's how you can measure. But very few people actually do that because it's time consuming, and often the data is not even available.
Coming to that, because you develop, if I'm correct, the largest data platform for energy flows in Europe, which is used by governments, which is used by companies and investors alike, how to structure their own strategies, correct?
Well, we do have a digital twin of the entire continent.
Entire continent.
European continent, American continent, Sub-Saharan, a few others, and Far East Asia. Within that, we do assess material flow, energy flow, people flow, and other flows. But the challenge is often we are not an island. When you, for example, source oil from Middle East, that is from somewhere else that is coming in, doesn't show up on our balance sheet of a European. We have very little oil in Europe. Most of it comes from outside. So in certain aspects, you have to look at the global picture. In other areas, you can look at the local. So you have to be very careful on how you assess. There is no one paintbrush that you can use for everything. You have to be very selective on how you do that. And you can do that sector by sector, or area by area, or technology by technology.
So you include on your platform the externalities that often occur, particularly in energy value chains?
To some degree. You have to also look at the effective time scale. For example, carbon is a good question. What is the impact of carbon? This is a debate which people, it's pretty much understood there will be global warming, we just don't know how much, and it very much tied to this greenhouse gases that we emit. But what is the eventual impact today on certain regions is debatable, and it's just too far out for us to be able to predict. So yes, we include certain aspects, but I cannot claim yes, we include everything.
That's very interesting. So that leads in also to the thing of the emerging aspects of how to plan in terms of scenario planning.
Correct.
Scenario planning started actually in the oil industry. The first one, I think it was Shell or BP. I think Shell.
I'm not sure.
I think it was Shell. Shell was the first company to apply scenario plannings to their long-term projection, and mining obviously too. The first government to apply scenario planning was Finland. Why? Because the exposure to Russia, the unpredictability with that thing. And now it's, you know, popping up a different. Scenario planning is very difficult because you accommodate uncertainties, probabilities, and some even fall asleep here in the audience. Eric, pick your neighbor up. I mean, it's terrible. Professors have a lot in their brains, so so we have. So from we had now the E, we had the S, and now we go to the G. Frederick, Ethiopia is the second largest country in Africa. It has 100 million people and produces about 100 billion GDP. That's pretty much about the assets that you manage with about 2,000 people. Now, $100 billion need to be invested according to certain standards which you defined, which are obviously linked to also the demand from your pension investors mostly, or other sovereign wealth funds. How you go about in order to comply? You have around 30 companies in your portfolio. How can you make sure that that your monies that you say you're 100% ESG conform will actually be transmitted to the companies that you own? That's a lot. How many people work in all these companies that you own?
It's about 280,000.
When I say own, that's only partially correct. What you are technically is a fiduciary duty holder on behalf of the ultimate owner, which are usually pensioners. So you have a heavy duty of $100 billion with 30,000 employees that you take care of. 280,000. Yeah, that's the size of about Nestle.
Yeah. So, and there are actually, we have 1,200 institutional clients that have entrusted us with, in total, $95 million to invest in private companies, private real estate, and private infrastructure. And behind those 1,200 institutional investors are 250 million fiduciaries, which is 40 times Switzerland. And behind those 250 million fiduciaries, there is a family. And the money that we invest is pension money. So it's that part of your savings that has to be the safest. And so it is a big responsibility, Kaspar. And I think you chose a firm to work for, and I chose one that takes this responsibility incredibly serious. So we can talk about ESG in a big prospect, right? What are the E, S, and G aspects that we need to look at? The society, right, where we invest. We have wind farms. These wind farms are great for the environment. They produce green energy, but they impact the local community because they are not nice, they don't look good. So much like you, we work with the local communities where we have onshore wind parks to assure that they understand why we build it, for whom we build it, and even enable them to invest alongside our clients and profit from the upside of our investments. That's Murawara, which is the biggest onshore wind farm in Australia. We can talk about it on the big side, or we go all the way down. I have the opportunity, or I have the privilege of serving on 5 of the boards as a director of the 31 companies that we own today. Those 5 companies employ more than 30,000 people. And we had a board meeting yesterday, and about a fifth of the time we spoke about the safety of our employees. This is a company that we bought within the last 18 months. We bought it from 2 different companies, very credible brand name investors, also from the private equity side. And what we found out is that, and in the diligence, is that their safety record for the employees is abdominal. We have 3.5 times more accidents with our 6,000 employees than the industry has as a standard. So how do we now take responsibility and create a sustainable environment, a safe environment, to make sure that all of our 6,000 employees go back to their families at the end of the day, safe and healthy? And how do we do it in such a fashion that we still can guarantee a return for our clients? Because without that return, we don't have a purpose as a company. So ESG and governance, it can be a very big topic, it can be very nebulous and sound a lot esoteric. But in the end, for us as an investor, we have come to the conclusion that we cannot create sustainable value if the companies that we own are not sustainable. And being part of sustainable, and that's perhaps a mistake in your flu theory and your flu formula, Casper, I saw it earlier, is under sustainability you write E, S, and G. The P is missing. A company cannot be sustainable if it's not also profitable.
Well, actually, wait. Let's go back to the flu formula.
Flu formula, did I miss it? I think under sustainability.
Yeah, to go to the very back is the dollar sign.
Well, I didn't read that.
Well,
Okay.
no,
Don't close the discussion.
sorry, you can try it if you don't.
Don't close
But
the
you're
discussion.
absolutely right.
No,
But
don't.
no, I didn't. But you're right. It's actually at the base.
Okay, very good. So then it's good. So I think it is, and so now what does that mean to our topic of greenwashing? We have invested over $2 billion of our clients' money into renewable energy, not because we are better citizens, but because we have generated over 18% annualized returns on those investments. If you want to accelerate the build out of renewable energy, what you need to do is you need to internalize the cost of carbon. Right? You can do the German model and pay 38 billion euros in subsidies to close down coal mines and coal plants, or you can internalize those costs of the carbon to the coal mines and the coal plants, and you will see that the acceleration of renewable, sustainable energy forms will be much, much faster. So the question on greenwashing would not exist if the policymakers would not find a way to internalize the external cost of both resource usage, be it in mining or in extraction of oil, or in the pollution that they cause.
When it comes to carbon, this is the singular most important point that is made. Everything else.
Since repeat the single most important point that we can close.
Pricing carbon within the asset class. Coming up with a pricing strategy that is not only economical but also allows equilibrium to occur in a global sense. And this is where the problem is. It's not just coming up with a number, but how do you bring it up such that the global equilibrium that takes place today, the actors are willing to engage, because if it is too different, the disequilibrium will dislodge the existing actors who never agree to it. So it becomes a chicken and egg. Developing a methodology of doing that is really the most challenging thing when it comes to environment, when it comes to climate change. Because that's not the only thing. But on that specific thing, I totally agree with you.
Perfect. Now I would like to make a little vote with you, and for this reason, Michael, please read this little paragraph loud, because his English is better than mine, and as a judge from London, you can much better read that. Usually he wears a white wig.
The barrister, not judge.
The barrister,
right
sorry.
there, yeah. Thank you.
The barrister.
Profit is our means to an end.
You have to talk to the audience.
Yeah, that's true.
You're
That's why I'm not the judge, you see. I'm always facing the judge. Profit is our means to an end, but never the end in itself. Our end is to positively impact the lives, families, communities, and environment we touch every day.
Thank you. Stand here, because you're much better than that. Now we make a little vote. There are 4 options. Which company put that on their website? 1, is it Nestle? 2, is it ABB? 3, is it Gucci? 4, is it something else? Who would vote for Nestle? Oh, you're not very shocked. So 5. Okay, who would vote for ABB? Oh, that's a little bit more. Let's say 10, huh? 10. Who would for Gucci? Oh, good. So, how about 10? 10, 10, 5. Who is for something else? That's very good. Well, what do you think that is?
It doesn't actually say the answer there.
What do you think? Who put this on the website?
I think it might be Nestle, but my instinct says Gucci.
Okay, this paragraph I put on the website of a leading African company from Sudan called Hajar. And that's him. Sustainability, third generation in Africa. Mike represents the company here today. Thank you. And you didn't know that.
Very Sudanese.
That's very difficult to believe he's Sudanese, but in indicates what the profile, which then indicates a little bit better.
What does that company do?
The company
Solar, we do technology, investing in agriculture as well.
and consumer goods, right? So no, it's really little government-related things. You come from agriculture, you have to say.
Originally.
And the name Hajar means?
Stonemason
Stonemason.
in Arabic.
Mur. Very good, in Arabic. Perfect, thank you so much for the first time. Now we go to the second cycle. We go to the industry cycle. So you belong, Sean, with the biggest polluting industry, perceived biggest polluting industry. It's heavy, dirty, intransparent, some say. And you today belong to the bad guys. In Davos they shout, they block the railroads for all mining, oil and energy and stuff like that. And when you start a new project, you need to get the permission. And this is very complex. Because 2 years ago, I made an entire week called Finisori Independent. That means, in Latin, the end depends upon the beginning. So the success of a mine depends how you plan, structure, and structure also collaboration with the local constituencies, whether it's in Canada or somewhere else in the world. How do you go about it this first very complex stage to engage and motivate and convince the authorities?
It starts from a big picture strategy. When I was hired at Agnico Eagle in 1985, the founder, one of his policies was, in terms of our interest in jurisdictions around the world, he said, we do not go where they don't wear overcoats in the winter. And that was his way of quantifying political risk. And he took that position because there was a large nickel mine built by a Canadian company in the Dominican Republic in the 50s, and that mine was taken away from that Canadian company. So it starts from, we can't be everywhere, we don't want to be everywhere. We choose to be in parts of the world where people actually want us there. So that makes it a lot easier to get acceptability. And we've built up a reputation as being a very good partner, and I'm sure people check us out as we go into new areas. So where are we? We're in Canada. That's where the bulk of our production is, about 70% of our production. We're in northern Finland, north of the Arctic Circle, in Finnish Lapland, believe it or not. We have the largest gold reserve and resource that's currently operating in Europe, and it's 25 kilometers from a major tourist area. When we first went there in 2004, after we made an investment in the Swedish junior that owned it, the mayor of the town said, how quickly can you get this mine built? Unemployment was super high. And that's the type of welcome you want, because you want people that sort of understand the risks but are more focused on the opportunity. We're in northern Mexico. We have 3 mines in the Sierra Madres. In northern Mexico, unfortunately, there's mining and industries around mining, and there are other activities which are not legal that exist, unfortunately, in those regions. 70% of the population in the vicinity of those mines work for Agnico Eagle. And so people understand that there are benefits coming, but how do you share those benefits? So as you said, Reza, it's local. And you can make a blanket statement about mining, and we know there are bad actors in mining. And we know that there are bad actors that go into parts of the world and take advantage. That's not sustainable. What we've built over 6 decades is sustainable because we build a true partnership, and you can see it in Nunavut. And that's the opportunity that we see. In that analysis that you referenced at the start of 1,200 companies, which is the S&P Global 1200, they've done this list for about 8 or 9 years. They select the top 100 companies. Part of that rating is sustainability. The other part is shareholder return. So we've been able to be in that list 3 times in the last 8 lists, And that's over a 20-plus year horizon because we built a business that's focused on return, but also the sustainability part. So what's happening in mining, the lead time to get these projects built is becoming a lot longer because the dialogue is much more intense, it's much more complex. But if you don't start from a basis of trust, you're never going to get anywhere. We've been engaged in a recent situation in Mexico where the project was stopped, I think around 10 years ago. And the company that currently owns the project is physically not allowed to go into the town. We've been approached by the government to say, you are the only company with that track record that can go in there and have a chance of actually resuscitating that. So if you don't start with trust, if you don't start with transparency, then you're not going to be a company that's able to generate above average returns for 6 decades in the mining business.
Well, that's very interesting. Now, Roger, you need to help me. He tells a lot of good things, and he tells me he's the best, and so on. Can I believe him? I think I need to go to see you as an independent assessor, and Norman S. Oman is your Ernst & Young, so you stay fresh at the front by being earnest. So how does, and as an auditor from outside, collaborate with the industry, but also with the government, obviously, to implement the policy in the correct way? Because you are responsible for big mining companies and big commodity trading companies, including the very biggest one in the world, that you're personally responsible, that they adhere to what they do, what they say, really.
I'm always a bit in between. Sometimes I speak as a professional coming from the mining and metals industry, vis-a-vis being a professional in one of the big four. So you see, it's also quite a certain ambiguity for myself. And I just had this morning with our senior management that flew in from the US, quite some discussions about the industry focus in Switzerland and in Europe. And guess what? Mining, metal, or natural resources, one was of the big topics, especially in relation to ESG as well. And what I've learned is just the lack, even in a company like Ernst & Young. I would love now to have the Chatham House rules, because I'm telling now a bit some internals as well. But even in companies like Ernst & Young, it needs a lot of education. So I really have to train people, telling them what does it exactly mean. Exactly such a process that Sean was alluding to, from exploration in setting up the whole business till getting something into a stock exchange or visible in the value chain. It's lots of education. It's getting lots of visibility and transparency into the whole discussion, the whole process. And quite interestingly, all what I'm talking or discussing internally, I can perfectly reflect or mirror it into the outside world as well. So in our day-to-day discussion, we exactly have the same. It's still a bit like we are talking costs, internalizing all the costs. All these fantastic people working in the sustainable departments or ESG departments, however I want to label it, they really have to put a business case on table. Why are we around? What is the value add at the end of the day that we bring to the firm, to the company? So I feel a bit for them because they are stuck somehow in the whole process, because management, the attention is not there yet. So again, attention, visibility, awareness. So that's what we see hands-on day-to-day, where we see a certain lack in the whole process. And forgive me to give just this very quick statement. I think the industry that Sean is coming from, that I'm really allowed to serve, which is a fantastic industry, they do much better than they also communicating with the outside world. And believe me, I had chats in the last couple of days and weeks with press people from those companies, and I just wanted to learn from them. Hey, what are you doing? In Switzerland, we have this very delicate initiative, the Swiss Business Responsible Initiative, that is always a bit like in the center of all the discussions. We have to make all the companies aware of those initiatives, because sometimes these are foreigners, they're not aware of the dynamic that might get into Switzerland. It's also, again, lots of training, education, talk, speak out loud. And that's a bit like as criticism, a very silent one, but it is to these mining companies. They should be more prominent on stage as well and talk about what they are doing. And that's still a bit missing. And that's one of my wish scenarios, that they are opening more what they are doing. I know everything is a big secrecy on what they are doing, the mining codes or the recipe they have behind the scene. But that's now is the time to speak up and talk about that. Because then I close my point, it's getting another player in the whole ecosystem. These are the financial institutes. And again, I do just reflect what you know that for sure. I do just reflect what we see. The financial institutes are pushing heavy pressure on not only on the mining and metal companies, but also on the big industry players. We see currently cases where companies, even stock listed companies, are getting troubles in refinancing their businesses because they are not green or sustainable enough. So we get emails like, hey guys, help us, we need a policy, we need that, how do we have to deal with that? Again, education, transparency, communication, that's really important. So to close my speech, I think in the industry that John is working on, they are doing their homework, they are doing it pretty good. I don't say per se they are role models, because then I've got partners group insisting heavily, I know, but they are doing lots of very, very good things, believe me. So that's a very long answer to your short question.
So I'm very happy to see that you really take care of your clients as also in a motherly way and trying to educate them to come forward in a more positive and talk about the good things they're doing.
Yeah.
That's wonderful. So from the investment standpoint, you also work a lot obviously with standard setting agency in the wide sense, auditors, because you have to rely on some sort of outside counsel. How do you make sure in order that what you would like to impose, or let's say that you adhere to the strategies that you define upon your companies, that they are actually being translated into real action?
Okay, there I'd like to correct the customer. We are in the unique and extremely comfortable situation as a private market investor not to have to rely on the auditors. Right, that's the difference between public investing and private market investing. If I have inside information, right, on Angico, I cannot invest, right? So if I find out that you're doing really well and that you have a good strategy and that you're hiring new strong people and that you've been able to fully implement the strategy that you had 3 years ago, 2 years early, if I find that out, suddenly I'm prohibited from investing into your company. Private market is the other way around. I'm not allowed to invest until I've opened up the bag. So we do not look at ESG reports from companies. We go in and diligence the ESG. So the company that I talked about that we have bought, we knew when we bought the company that their safety record is bad. And we saw the opportunity to improve it. By the way, we are generating profits by lowering the safety ratio because we're paying less severity, we're paying less, we have the workers working and producing goods instead of being home because they have a broken arm or they have cut their thumb off. We pay less liabilities. Again, we're doing this because it generates returns. So we have, as a private market investor, we have the distinct advantage of not having to rely on standard setting boards. That does not mean that we are not working with them. Right, so on the sustainability side, we feel that the SASB, so the Sustainability Accounting and Standards Board, is one of the thought leaders. And we have used extensively their knowledge of how they measure and how they assess ES risks, less G risks, but environmental and social risks in different industries and how we can incorporate those risks into our diligence. So we work a lot with the big four audit companies to see where is the best practice. We work a lot with people like the SASB or the UNPRI, so the United Nations Responsible Investment Board, to identify best practices. But the benefit that we have is once we invest, we actually know and have found out ourselves what the status is on the factory floor, in the community, and with the employees.
I mean, these abbreviations that you mentioned sound maybe even for me something very confusing. Yes. I mean, there's so many agencies, international, local, state, private, public, a mix of thereof and so on, and they come almost every month there's something new coming out, big announcements. I put all the recent ones together in the document. You can read about it in the back, I don't know, about 50 or something like this. But you mentioned two important ones that for you are important. a particular way, right?
Yes.
So for an industry like mining, you look at other standards like the Canadian Mining Association, which is regulating or trying to set standards for, and Canada lives out of the ground, meaning how much is the reef from the ground in GDP terms?
I'm not sure, but I think you're right on the sustainable mining initiatives that came out from the Mining Association of Canada. So that's the industry actually taking the lead on this and putting standards out that are required to be audited. The World Gold Council has done the same thing, and the World Gold Council is top 25 gold producers in the world, operating in most of the countries around the world. The challenge there, that's the easy part. There are standards that are agreed on by the companies. Where it gets more difficult is, and more challenging, is for the people running the mine. Oh, not another set of standards, because it just layers on cost. But that's okay, that's a part of doing business. I think what's important and what has to catch up is sort of the desire to do good on ESG, the desire to create a balance between profitability and giving back. That's all good. That's far and away, so far ahead of where the service providers that actually do the rankings are. Because that analysis is only that deep. And how can you actually evaluate Agnico? And we're not complaining because MSCI, we're the top ranked mining company. How can you actually tick boxes and come up with a 90-page report and never have visited one of our mines? How do you actually do that? And so, you know, it would certainly cost more, but I think investors that rely on those reports would be willing to pay more for insight. So, whereas the media, if the media is doing a story on Agnico, they go to Baker Lake, which is nearest to Meadowbank. National Geographic did a story on Agnico, on Arctic mines. We were the mine representing Canada. There was a mine in Russia, there was a mine in Alaska. They went to Baker Lake. They went without us to talk to people in the community. That's how you evaluate ESG properly, and we need to get that up to the level which justifies where people want to go with this whole ESG movement.
But who will do that when the flight is into passive investments on the public side?
That's the great question, because I think what's happened is, and we see it, we sort of saw it on the governance side, because the G was first.
Yeah.
And so we have big shareholders like BlackRock and Fidelity, and any issue we had around G, we would pick up the phone and call the fund manager, someone we've known for 10 or 20 years. I'm not concerned about that. We know you personally, we've been to your mines, we know how you guys think, we know how you operate, we don't have an issue with that. That's evolved to the point now where the fund manager says, your score on G on this, I don't have a problem with. My legal counsel or my governance people have called us. We need a 1-hour call. Or we're not going to vote your proxy because the governance people have an issue. Years gone by, the fund manager said, don't worry, you're going to get the votes. Well, so you've got governance people within these companies that don't know us. Maybe they get a call and they have me on the other end of the line or somebody else. How do they really know? And so understand the big firms like BlackRock are adding resources, but they're still reliant on outside reports, but those reports only go into this much. And if you want to understand mining, you can easily understand E, because you can look at track record. You can understand safety, which is a big part of E and a big driver of productivity and all that. G is easy. How many women are on the board? What's your diversity policy? All of those things. It's the S, which is probably the most important part of it to us. You got to go there.
Reza, you're also in a sandwich position. You try to convince politicians to do the right thing. You work your whole life to produce facts. You work your whole life convincing others, to do better A than B. I mean, how do you do that, and how do you stay alive in the turmoil of politics that they don't lose their sanity?
I'm going to say something controversial.
I hope so.
I have talked to politicians throughout many countries. Don't look for them for solutions. Basically, the time constant of the reaction is so short that any complex thing has to be jingleized and passed on to committee, and then it will be passed on. I mean, I asked a friend of mine who was a senior politician in Germany for many years, I asked him, how did you survive in that role? He said, simple, day by day. You just make a decision for the day, and tomorrow is another day. So it depends on what that goes. And so what I've learned is politicians react to the mood, whatever the mood of the day is. So it really comes down to how the mood, how the filters in our society pass on this mood into our system. And what I have detected in the last 3 or 4 years is what you mentioned, financial. Pension funds, and I'm on board of some investment boards and others. ESG was always something at the bottom, you had to check or not, it didn't really matter because it had zero impact on the financials. You just had it in there and everybody just smiled. What is happening is that there is a threat that could be priced into ESG. And if you're making a long-term asset investment, how is that price going to affect your long-term investment? And this comes down like in carbon for or other aspects, how are you going to price it? And the political dialogue has created this frenzy of we've got to worry about pricing of ESG into our financial system, and we don't know what it is, so what we're going to do. So let's be conservative, let's allocate assets in certain areas and not others. So there is an impact. It's a low frequency. I have detected it the last 2 or 3 years. It's not because of the politicians, it's really a reaction of politicians to the mood of the society and the generational change. And the fact that the social networks and communication creates these resonances that the political class reacts to. And that reverberates into our financial institutions, and that comes down into how our financial system works. But the time constant is years, it's not a question of day or two.
So what you're saying is that Greta has a bigger impact than Donald?
Absolutely, no question. Absolutely, there's no question in my mind. I sit on a couple of boards and we are sitting there. This is the first time the last 2 years where, and I act as kind of a gatekeeper in some function, and we do take this into account. We haven't quite priced it yet, but it is coming. It is not quite clear when it will be priced, but when it's priced, you will see a massive shockwave go through all industries.
And it is being priced, yes. As Sean said. If you are a coal mining or a coal burning energy provider, you will not get refinanced.
Sure. Coal, and there are a few little things, but once you look at it, once you price it on a large scale, on a material flow, on everything.
Yeah, the challenge will be is that we've got to avoid falling into that complexity trap, because we hear the accounting industry saying, no, we're going to find a way to embed ESG in the financial statements. Please don't do that. They're already complicated enough. So we've got to keep things simple. And that's why I go back to the analysis. You have to get your feet on the ground and look at these things. And auditors do that when they're auditing the financial statements. They visit the mine site. So you can actually keep this basic, but if it's important to people that are investing in companies, you've got to invest the time. Our longest shareholder, who's always owned stock, is Fidelity out of Boston. And they have been going to the mines regularly since the late 70s. And what do? They have a position, they trade around it, and they've made hundreds of millions of dollars because they got up from behind their desk and went out and looked at it. I'll just add one point, a little bit of a commercial. But ESG, this didn't hit us like a shot in the side of the head because it wasn't new to us. We just didn't call it that, we were just doing that. And I'll just add this one point. Investor Relations Magazine, they do annual assessments of all the large cap companies by country. And it's probably no surprise to you that last year, out of every public company in Canada, we were the top ranked IR program. Why? It's not just transparency on ESG, it's transparency with our owners. If you run a business and you understand you work for somebody, a public company, you have owners, you're not just going to be responsible for the shareholders, because those owners want you to take care of more than just them. And, you know, it's all connected and it's all tied.
It's all tied up and all connected. With this, I would like to wrap up the first part, and I conclude that from Reza, don't look up to the politicians for solutions. And from Russia, I wish the commodity industry would come out of the closet. Yeah, and for the fact no sustainable returns without sustainable investors, and for sure collaborating with the locals in a sustainable way is a golden opportunity, makes you rich.
Sometimes. No, well, you know what, that's an important point. You go into a region and sometimes there are expectations.
Yes.
We can't do everything. We're going into an area that has issues in Nunavut. They suffer from lack of housing. They suffer from, you know, they don't have adequate food. The best social program that we can provide is a job. The government has to do a lot of other things. If you burden a mining project with everything, there's no mining project.
I mean, there's just one thing that Sean said, I know you want to close it, just ESG, S is by far the most complex one. And it's very difficult to put a price on it.
Yes.
Companies that create automation equipment, for example, if you actually look at the ESG report, they said they're doing great. But coming back to what you said, jobs, there was a candidate, US Democratic candidate, that in Iowa, 70% of job losses were due to automation. It wasn't about anything else. Automation was replacing jobs and it was creating unemployment. How do you deal with the fact that re-education has to be part of it? And this is where the S is really very difficult to quantify.
Thank you so much to the panel for the first part. So we come to the second part, which is a short debate, which leads to the second part of the question. ESG, we dealt with this, is move over shareholder, or is there more at stake dear holders, stakeholders, obviously. So we have there are two camps here, representing the shareholders. Maybe you separate a little bit, that you don't fight each other in other things. So you're the stakeholders, maybe move over a little bit, because otherwise they fist lying around. And here we have the shareholders.
I feel comfortable.
So this will be a short Oxford-style debate. An Oxford-style debate opens up with a statement and a vote, and you vote one or the other side. Then there is the debate. They have to try to convince you one or the other side, and a final closer vote from your side again. So you have to give your best in order to convince whether the statement is true or not. So the statement is the following. In 20 years, stakeholders will replace the shareholders. True or false? Who thinks the stakeholders in 20 years will be more dominant than the shareholders? Raise your hand. 1, 2, 3, 4, 5, 6. So that represents about 15%, would you say?
7 out of 50, about that.
About that. So 15%. What is interesting that some of the biggest shareholders were coming from the investment side, raised their hands. 15%. Well. So now, you as a stakeholder, you have to really be convincing to drag another 40% to your side. How you're going to lose. You're quite in an easy, comfortable situation according to the audience, but let's see who's saying.
Well, you didn't ask the question the other way around.
Well, it can be also the other way around. Absolutely, Psycho. Tversky, it's a good teacher. So let me start in this case, because you seem to be in the minority. Stakeholders, why do you think you should be the leader over the shareholder in 20 years' time? You can ask a statement directly to the other side, and you reply in a short. Everything is allowed except politics, personal attack, and physical attack.
An auditor and a professor, we feel quite safe on the physical side.
We are having a demographic change in this world. Baby boomers, after you had a massive growth in population after the Second World War, big baby boom, that are going to slowly disappear over the coming 20 years. The new generation that you see every day on TV have not had the challenges of war, and they are used to certain level of living standards that they feel threatened by the technological advances that are taking place and environmental impact. In addition to that, you add the social activism, which creates that purpose. There are going to be enormous political pressure. This political pressure has to manifest in a democratic system that most OECD countries are enjoying, and it also reflects on a large percentage of our market cap of our companies into policies that encourage greater extraction of rent effectively for social, environmental, and governance issues. This is unstoppable, and it is driven by demographics. Why do you think you can stop that?
You want to start? Well, Reza, I think the biggest risk to the shareholder today, I think you hit it. I see the biggest risk to shareholding in the populist trends and the ever widening and more extreme functioning of our political system. If I look, I'm a Swede, I'm ashamed that the Sverigedemokraterna, the right populist party, got 22% of the votes last time. This is a party that's trying to exclude immigration, that wants to separate the haves from the have-nots. And I do see the risk to shareholders if we allow the populists to dominate the political agenda. If we exclude that risk, I see the shareholder continuing to gain responsibility in the sense that, very self-serving also from the private industry, we feel that there's a tremendous benefit of keeping a strong, close shareholdership that can take personal responsibility for the outcome of a company on all dimensions, on the E, S, G, and P dimension. So, as a representative of the private industry and the private markets investing, I believe that the share of public stocks, where there's a widely dispersed, to a certain extent also, faceless shareholding, will be exchanged by a shareholding of institutional and financial investors who are able to take personal responsibility for the outcome of their investments. And I think those companies will be the ones that both generate the highest returns, but also are able to have the biggest and most positive impact on society as a whole.
Yeah, I would add to that. I think what happens over the next 20 years, the bad actors get weeded out. I think that's what this process does. You'll still have high quality public companies generating above average returns and still making major contributions to the well-being of their employees and the communities they operate in. But it's really what all this is the bad actors have been put on notice. And the bad practices of the past aren't going to fly.
I mean, it's quite interesting. I mean, somehow you find good arguments which are rather for the stake deal holders, in a way that you've mentioned the accounting principles, and I'm not a certified accountant, but I have a certain understanding about this complex construct. And we just see it from a shareholder value creation that companies, stock-listed companies, they have to close their books on a quarterly or semi-annual basis. It's always very hectic, nervous, because they have to be attractive to the investors, and that creates too much noise. And now you get something new on the plate. Or maybe just as a side remark, we already tried with all these US GAAPs and IFRSs to get a bit more a tangible view on the accounting and the numbers, so more through the management eyes as well. And these are exactly the principles that all these ESGs want to achieve as well. We are still at the very early stage. I know governments, these principles and how to define it, how to write it down. It's difficult, but I think if we keep still this shareholder view, it's getting even more complex to get ESG implemented. And now on top of that, stakeholdership, the way we do define it, investors are still part of it, but there are new players as well, so along the whole supply or value chain. So we should look more at the investors, at the accounting firms, at the banks. So the ecosystem is getting bigger, and with that we do believe that you need to look more broader as well, and that means stakeholdership rather than focusing too much on shareholder value or shareholdership. So that's
But you go ahead.
No, I was just going to put it back on the owners,
Yes.
because the management works for the owners. The management will take their lead from the owners. Here's one of the problems in the public market, and it's tied into what you're talking about with Roger. Long term is overnight now. There's a focus on, for an eagle, what difference does it make if we earn 42 cents a share in a quarter of 41, but the market gets all in a dither because you make, what does that mean to what we're doing in Nunavut? Well, it means nothing. And I think we've got to rebuild the relationship between the people running the business and the markets that are assessing the performance of the companies, and move away from the short-termism, which is this quarterly focus. Gold mines, long-term business. We don't mine it from a quarterly perspective. I think it's got to start with the owner to say, look, we're less concerned about what's happening this quarter. We're in it for the long haul. But again, we had the same fund manager at Fidelity for 10 years. Now they change all the time.
Yeah.
So it's all about relationships. It's all about trust. And we would love to go back to the old days where there wasn't all that pressure on this quarterly stuff. The research and the sell side research is poor quality now. Why? Because the poor analyst is forced to just focus on trying to predict the EPS in the quarter. So they're not going to the sites, they're not doing the proper assessment.
But again, that's, sorry, very quickly, you mentioned the long term as well, and there's quite an interesting development in the market about long-term value creation vis-a-vis the non-financial reporting standards. And I think that, again, plays into the core of the stakeholders, You get a much better understanding of the underlying business. So again, back to my point, education, getting the awareness, be it now management, investors, be it the accounting firms, the banks, whomever, in the supply chain. So that, I think, speaks rather for the stakeholdership, and exactly this long term. We would appreciate this long-term view as well. For us as an accounting firm, my colleagues in the audit department, it's quite hectic for them to comply also with all the developments in the stock markets, what's going on with the share price of our clients. So that's why we are also pleased to see a certain shift into the rather long-term view, and into getting an even better understanding of the non-financial impact, and that will be maybe even bigger than knowing what's the delta, the gearing, etc., etc. So that's why we rather tend to the stakeholdership in the companies.
If I may, just also go from the detail to the macro level. A corporation is effectively as a license from the sovereign state that allows it to have limited liability to engage in some business function, and that license is tied to the sovereign state to a large extent. The sovereign state represents in a democratic system the people, the stakeholders involved, customers, employees, and everybody else in the chain. Today we have a system that is massive amount of debt. Governments are issuing debts at very low rates that have been politically sustained there. As we have a global shift, geopolitical shift, the people who lend the money are not going to lend it at such a low rate. As their internal economic activity rises, they will demand higher rates. The demand on the sovereign state to pay back is going to generate significant impact on the well-being and the GDP of the country. Stakeholders, that means there would be an impact on the people, and the companies are also the people. It comes down to how much of the wealth that is generated would be shared by the shareholders versus by the stakeholders that are the people. Now, post 1989, where we had a large globalization, that issue went away because of the boom time. But the next 20 years, particularly with the rise of China, that question may be totally different. Have you considered how it will impact your businesses?
I think there are two aspects to that, or three even, Reza, that I would say that we have looked at in our firm. One is on a very self-serving base. We see that the need for the pension funds that are our clients to allocate resources to public and private equity will increase, because they used to generate 60-70% of their returns from government bonds. Those returns are now gone. People still, right, your shift in demographics, there are more retirees, there are less young people paying into the pension systems. That means that the fiduciaries will have to rely stronger on the returns of their pension fund. And as there is no returns left on the government bonds, or even negative, they have to find the returns for the pension fund somewhere else. And then they shift to first public equity, and then after a while into private equity. So as a partner of Partners Group, as a shareholder of Partners Group, I see a strong demand for the service that we are offering. If you look into the portfolio companies that we own, I think, again, I see a big risk in the increasing inequality, right? Both in the Western world, but also in emerging markets like Southeast Asia, and then the North-South divide, which is getting stronger and stronger. And I do see the risk of protectionist politics and fascist politics changing the system that we know today in Western Europe or in the US of a capitalist system, right? So we see a risk there that is very, very tough to price, right? But that is now we're talking 10, 15 years. And then there's the third aspect of how will it affect the individual assets that we own and that we work on. And there we have a couple of different things. We, on our consumer side, when we invest into consumer companies, we are steering away from companies that produce goods towards companies that produce experiences. Right? We are less and less into producing companies and more into food and beverage, travel, leisure, kindergartens, right? Being able to hand off your child for 2 days a week and enjoy the free time. So I think those are three answers that I see to answer your question.
Okay. Closing statement, but you have to convince the audience. You're on a much more difficult task than you. One sentence. Why in 20 years you should rule, why in 20 years you should rule? Who would like to start?
I'll go. The challenge today is to look at not the current economic system that has worked for the last 30 or 40 years, but what economic system our children and their children will accept within a governance where you have democracy as the basis of the rule of law. And that will determine how this stakeholder, shareholder division will be governed.
New generation, new shifts in geopolitical risk and dimensions brings already today shareholdership and stakeholdership much closer together, and we are convinced that even in a 10, 15 years time, stakeholdership will be the leading edge for investors or for the whole supply chain of the whole community.
Shareholder, you have to defend yourself.
Yeah, as an owner,
Your life is at stake.
No. I fully agree.
What do you agree? That's all that is.
No, I fully agree that the importance, the visibility, and the impact of the stakeholder will be felt much stronger on shareholders than it is today. We're getting more transparent. It's getting faster with every tweet. You can shape the opinion. Stakeholders are more relevant today than they were 20 years ago, and stakeholders will have a higher relevancy in 20 years than they have today. But the ownership and the responsibility for the corporations, where we have the license, I have not seen a system that works better than having, in an increasing complexity, few people take personal responsibility for listening and abiding to the needs of the shareholders and stakeholders than a strong ownership. And in a widely dispersed stakeholdership instead of a strong shareholdership, I see that threatened, and in the end the most effective system will win, and that's why I think that shareholdership will continue to be the predominant way of allocating capital.
Yeah, I would agree with that. The question will be over the next 20 years, and I agree the demographics are changing, but you only have so much time and energy. So where are the young people going to focus? Are they going to focus on that shareholder-stakeholder relationship, or solely, or are they going to focus on governments as well? And so I think 20 years, it can be a long time. A lot can happen in those 20 years, but I think that the focus will be on things like privacy, rather than the split information. Being able to do things and not worry about Big Brother watching you. So I think, we talk about this because we're here and it's important. For people out in the street that are focused on putting food on the table, I think it's less of an issue for them. They're more worried about some sort of short-term issues.
Perfect. So now,
do I get to bribe our side yet?
I have some gold. These monkeys,
And you wonder that the mining companies have a bad rep.
No, we'll make this case. You just made a case, Reza. The next 20 years are going to be unbelievable for gold because of uncertainty, debt, no growth. Now this is the cold commercial.
This is an impossible debate because both agree with each other. So it is a difficult topic. But I think we touched a lot of points. The complexity of this access shareholders stakeholder. I go into great depth in the document if you're interested, because it is a huge problem. 50% of the public markets today are in the hands of 3 large asset management companies. It's BlackRock, State Street, and Vanguard. And they don't vote. They have a legal fiduciary duty. They outsource it to 2 companies, ISS and Glass Lewis, which have no fiduciary duty legally. So it's completely a perverted system. They impose upon the asset managers how and what to vote, and they basically take away 50% of liquidity. And liquidity is the essence of a well-functioning market in terms to find a price. It's a huge problem, it's very complex, and it takes a lot of evolutionary complexity on the regulatory framework, which needs to be addressed, and it will be addressed, because it's increasingly being pressured. Now the vote to you. 20 years. Will the stakeholder overtake the shareholders? Yes. Here we go. We did gain some votes, not bad. Teresa Rocher. So let's say we are up to 20% of that.
36.
It's not bad. So I personally am glad to hear this, because I'm on the shareholder side. I believe in free and democratic, well-functioning markets, but we need the stakeholder issues. You forced them. Just like the bunny and the lynx, they know they need each other, and talk about sustainability. The Hudson Bay Company, more than 300 years old. In Switzerland, we have probably the oldest one. Is something that is probably exposed back there. It's called Schweppes. I don't know if you know Schweppes. Started 1782, and the very reason why Schweppes started is because of a E aspect, because industrialization in the 18th century in the UK was so dirty with the coal that life expectancy decreased 50% and population also. They didn't have fresh air. So they had this idea, the concept of oxygen exchange between the lung and blood was not established. So they had the idea to put clean air into water. Yeah, gasified here. Gasified water now today. That was the reason why Monsieur Jakob Schweppe, that was his name, 1782, founded the company Schweppes and sold clean air in water, put a little bit quinine inside because there was a lot of malaria, the second E, which then was taken away only in the 19th century. The company is still alive after so long, and you enjoy their beverages. So let me conclude this, and thank you so much everybody for coming, for the sponsoring, for the organizations.